Welcome everybody to the Chinchilla Pickin' Podcast. It is February the 4th, 2024. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the famous Baron of Bonds, Brandon Beaver. Brandon, how are you?
I'm good. How about yourself?
I am doing fabulous. It is 1 week from the Super Bowl. We had that going on. I am finally healed up from a back injury I had and able to get back into the gym. So last year I went to the gym and I was very vocal about this on the show, right? I started going back to gym and I weighed 315 and I got down to 260 ish around there. And then I started having one thing after another and I'm now fully recovered but I am back up to 295. So hopefully this year we could get it down to 250 ish and stay. Um, Now that I am fully recovered here, but yeah, that's my biggest thing. Heading back to the gym, I go to F45 training. I recommend it. I do not get paid to endorse them. They're just a great company and great coaches there. So if you get an opportunity, please check it out. Um, Other than that, there's been lots of earnings this week, man.
Yeah. Let me talk a little bit about this too, about what you were just talking about, health and fitness, because I refuse to pay for a gym membership. I never have. I mean, I did for like a second with Mercy Health Hospital's gym down there. I did that for like a month or two, and I just got tired of paying for it. Even though I was playing basketball. I'm not very good at basketball. I can rebound really good, but I can't shoot at all. So, or dribble and run. That's not a thing. So I will stand below, the hoop on defense, grab the rebound, get the rebound almost every single time. I'm good at about boxing out. That's my thing. Rebound it, pass down. That's it.
Gotcha.
And
Gotcha.
if I happen to be open because nobody has any faith that I'll take a good shot, then maybe I will, take a decent shot where there's nobody within 5 feet of me. But anyways, um, I used to work in retail, and I would walk on average, just by the step counters and stuff like that, it'd be like 12 to 15 miles a day on average. Um, and so when me and my buddy went to Europe back in like 2013, 2014, somewhere around there. And we just walked for like 2 weeks of Europe, and my legs, my feet never got tired. His were getting tired, and I was always bragging about, like, how much further I can go than everybody else. Same thing when me and my girlfriend first got together. Um, we would go out, we would go, looking for mushrooms and morels and things like that, and I was always able to kind of outlast everybody. My legs were never tired. Man, I've had office jobs now for the past 2.5, 3 years, and went to the flea market yesterday, and after about an hour and a half, my legs were killing me. So I need to do something about that. I kind of went back through my history of steps counters and stuff like that. Now I used to be beating 10,000 steps handily, and now I'm nowhere near it.
You just got to stay active and eat right, man. Eating right was what really helped me, but yeah, active helps as well.
Yeah.
Yes, definitely. 100%. I tell you what, last week was big week in news. There's a lot of stuff I want to cover, a lot of headlines, a lot you and I are going to talk about. You've already mentioned some things. I mentioned some things. We tell each other, So the rules are Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You hear the live back and forth on the show. We are actually going to have some disagreements. We've already said that. So I hope that it becomes entertaining for you, but it's also you learn maybe a few things as we have these disagreements here on the show. Um, I know we have a lot we want to cover because there was a lot of news out, so I kind of want to get into it if you're okay with that.
Yeah, let's just go straight to it. Do you want me to start or you
Yep,
start?
always spare and lead the way.
All right. CH Robinson, they reported earnings. Freight still in a recession. That's the long end of that short story here. Revenue dropped 17% to $4.22 billion. This missed analyst expectations of $4.33 billion. And they reported an 18% drop in transportation revenue. They said that weak freight demand and an elongated market trough, combined with excess carrier capacity, continued to result in a very competitive market. They said that they expect 2024 will present the same headwinds seen in 2023. There's been a little bit of a bullish uptick amongst some analysts because of this whole Red Sea situation that's happening right now. And that might, that's probably going to move over ocean freight up. It might temporarily tick up domestic freight just because a lot of oil manufacturers are trying to move to domestic markets now. So freight, at least in the oil industry here inside the United States, freight might go up for that. And overseas, over there, I think freight for oil has actually been climbing anyways before this. So, but I don't see the freight market recovering this year. Might be next year before we hit a bottom. I think we're still going. What do you think, Dave?
For me, it all depends on the economy. So there's, I don't know if you're thinking that there's not going to be enough freight to move, or if we're not going to have enough containers to move it, or ships to move it, or if there's going to be delay in shipping. Where are you thinking that this whole downturn is going to come from? Because if it's coming from the freight to move, then that's going to have a trickle effect on all the other parts of the economy.
Well, here's the confusing thing. I mean, we just had a great jobs report. We've had consecutive great jobs reports. We've, all the rest of the information that's coming out about the economy seems relatively bullish. Yet, C.H. Robinson saying it's a lack of freight. And
So, all right. So
exactly.
it is a lack of freight, what that company's saying. All right. So
Yeah.
let's take it from a couple standpoints here. Number one, you mentioned the jobs report. Yes, we're creating jobs, but yes, we're adding jobs. Sorry, we're adding jobs. We're not creating jobs. And here's how I define the difference. If you're creating jobs, that means you're adding to the number of available jobs in the market. What's actually been happening is the number of available jobs in the market month over month has been dropping. So these jobs that we're quote unquote creating, it's just people taking the open jobs that are available. We're actually not creating more jobs. We're actually creating less jobs. And eventually that's going to hit a point to where it just causes a unemployment rate to tick higher. That's what's going to happen if this continues. I have yet to see the latest updated numbers. The last time we checked, and I've covered this on the show, we were up above 11 million at one point, and now we went down to below 8 million available jobs on the market as of the last numbers I saw 30 days ago. If it drops again, that means we're not creating jobs. We are just taking away from the available jobs that are there.
Well,
That's point number. Huh?
yeah, politicians can, skew the numbers, leave things out, say it in different ways to make it seem like it's one way when it's not.
Yeah. So that's point number one. Point number two, if C.S. Robinson is saying this and they're saying that hey, there's just no freight to move, um, you know, that's a bad thing because that means companies aren't using these C.S. Robinson as much to move freight. That means we're not going to have as much inventory to sell. That means we're actually going to have lower sales numbers. Top line numbers are going to miss, but that's months down the road. So this is an indicator in advance of what companies are actually doing. I would like to see who their customers are, to see what if it's just particularly one sector or another. You could delve deep into that number, go into a rabbit hole here, and really see, okay, where is this affecting, and what customers are they affecting? Because then is JB Hunt, who reported just a few weeks ago. Theirs wasn't too bad. They said they saw some light. Was it a rail? They saw some drop in the rail usage, but everything else seemed to be pretty steady. And so, who's Robinson's customers? Are they leaving Robinson going for JB Hunt because JB Hunt could underbid them?
It's possible. It's possible. They had a net profit in the fourth quarter of $31 million, compared with a $96.2 million profit a year ago. So quite the drop there.
Right?
Yeah.
Yeah.
And with, the jobs number is no different here. They say in politics, there's three different levels of lies. There's lies, there's damn lies, and there's statistics. So the statistics are the worst part of it.
Right. You can make it say whatever you want.
Yeah. Apple earnings. A lot of people were a little bit disappointed here. But listen, like 15% drop in China, that's what people were disappointed about. There's a recession in China that's happening right now. And kind of all the luxury goods and services, Apple's kind of a little bit more heavily priced than their top competitor in China. is I didn't really see this as a complete negative quarter here. In fact, they beat estimates. They reported finally their first revenue increase in like I think 3 or 4 quarters. Um, so revenue was up 2.1% October to December. Net income of $34 billion, up 13%. Um, both of those actually beat expectations. I just think it was the China situation that people were a little bit worried about. But I think their stock was only down like 3.5%. So it wasn't like there was massive selling here or anything. And I think a lot of analysts and investors kind of have the same mindset that I do. The China situation will hopefully resolve itself. Um,
I love all the news about the Vision Pro headset. I've been watching on TV. So someone I like as I've been vocal on the show, like I've messed around with VR for years, right? Ever since it was just the original Rift or your built system that you built yourself. Um, and so I love how all the Apple people are now like, oh look, VR's that's where it's gonna be. I mean, this is amazing. Apple's leading the way and coming out with this brand new technology
Yeah.
that's just gonna change everything. And that really irritates me because I'm like, this technology has been available for years, and you could use your if you have like Excel at work, which most companies use, Microsoft Excel or Google Sheets, you're able to do the work in your headset with either an Oculus or an HTC Vive or one of these other headsets for years. Guys, if you're an Apple fan, that's great. I'm glad you love the company, but this is not something that's brand new. They are not innovative. They are building off of what other people have built.
Well, I think they're gonna go a little bit of a different direction for it. So they don't really have controllers for games,
But
right?
there's no new direction for it.
They kind of shunned the whole game thing. I think they have figured out that Meta's probably going to own the gaming market, just like they did it with PCs and Apple's. I mean, the Apple computer or the Apple laptops, they've never been gaming
Well, I
devices.
mean, you have that, but I hate to interrupt you, but this is like something that I'm very passionate about. You don't need controllers to do the office works in any VR headset now. They have control-free settings where your hands actually just move. So yes, yet again, this is nothing new and innovative. It's already been done by Oculus in the Oculus 2 headset, not even the new one, the Oculus 3. Years ago, Oculus was already doing everything that Apple is claiming to be innovative of.
Yeah, I just don't think that. I mean, look, the game developers and stuff like that, they usually don't have games that don't require controls. So they're not really going to be. I don't. I think Apple just gave up on that. I don't think they
Yeah.
care.
I
Uh,
mean, I agree, but like I'm just saying the technology's been around for years, guys. This is nothing new. There's no new technology here. It looks nice and shiny, which is what Apple does well. I'm glad that Apple sorry, I hate Apple if you don't know. Products, not the company. I've owned the stock before, so hey, I'm a sucker too. I'll own it if it's going to make me money. But as far as the products, I'm not a fan because I think they're just in a shiny case, but they're borrowed technology from other companies,
and,
and
and
that's what I say it is.
it's $3,499.
Exactly
So
right.
here's my thing about this. So right, I could have an Apple Watch, sit next to my girlfriend who's also got her Apple Watch, my iPhone. She's got her iPhone. We're on the same couch. We don't have to borrow anybody, each other's iPhones or Apple Watches because they're, cheap enough for us both to be able to afford. But if I'm sitting on the, here's why I'm not buying an Apple headset. First of all, I don't want to spend $7,000 for both me and her to have it. And I don't want to get punched in the face by my girlfriend for taking up too long, too much time with the Apple Vision Pro because we have to share it. So I don't know. That price just doesn't make sense to me. But look, 160,000 to 180,000 units. That's where they're guiding for pre-orders on this thing. So people did come out to buy it, but that's nowhere near what the Apple Watch or the iPhones.
Yeah, they're probably using Klarna or Affirm or some other way or an Apple credit card to pay for it, which is putting them more in debt when they don't need to be.
Yeah.
But as far as the business use, guys, Microsoft, I'm sure I don't know if any a lot of everyday people who aren't involved in stocks or aren't involved in VR probably don't know, but there's been the hollow fit lens that Microsoft has produced for years and years that they make billions off of, that they don't produce for consumer technology. They produce the VR headset strictly for military and government use only. And they have contracts with the US military. Microsoft has developed VR technology years before Apple did. And I'm just saying, guys, that it's nothing new. Like there's this, oh, you don't have to play games with this. This is more professional. Well, Microsoft, man, they
Yeah.
had the exact same thing. Come on, this is
You
nothing
know
new.
what? Did they start? I remember you talking about the HoloLens technology
Yeah, I've
because
mentioned it for years.
there were other companies that were bidding for that, and
Yep.
kind of startups that were basing their story, their startup story, on HoloLens technology. And then when Microsoft got it, those guys just went under. But
They didn't go under. They got quiet. Microsoft's been doing this quietly. They're not making a big noise about it. They announce it. It's in their earnings reports. If you look deep enough, it's in their earnings report, how much money they're making off of it, how much they're investing in it. Microsoft's had this technology forever. Apple's the last one to the game.
but will they perfect it? Right?
Oh, there we go. There's
That's
the
what I
Apple
want.
guy.
That's what I have
There's
to
the
know
Apple
because
guy.
look, there's been so many people who have been late to the game. Henry Ford didn't invent the automobile.
Now, Apple has an extraordinary, awesome marketing team. If you can hire their marketing team, you would win at everything,
Okay.
because Apple's screen technology is what Samsung's using 3 years ago. Apple finally updates their plugs to USB-C adapters because it's the better one. But they got every Apple person fooled thinking that they're the best and most up to date technology. They have a great marketing team, and it does look better. It does look nicer and shinier. It does. I will firmly admit the Apple Vision headset looks better than anything that's been put out there by all the other guys. It looks better.
So Apple is the Thomas Edison of new technology right now, basically.
There you go. There you go.
Everybody thinks that Apple invented all of these things and that Thomas Edison invented, electricity, but not quite.
There you go.
And
There you
Thomas
go.
Edison had a better marketing team than Tesla did.
He did. He did, and
Oh,
that's
he's
why
better
we.
at marketing.
Yep. That's why. Yeah. We remember him. So there you go.
Yeah. So they
Anyways, moving back to investments.
okay. So Apple hasn't disclosed really how many headsets it sold, but that's just kind of the guide from Wall Street's at 160 to 180,000. 200 apps will be specifically made for the Vision Pro. Disney and Microsoft are both big names that have came out and said that they're making apps for it. But really, still the crucial business here is the iPhone business. And this is what people were worried about. They were worried about slowing iPhone demand, but it grew nearly 6% from the same quarter a year ago. $69.7 billion in sales versus $67.6 billion analysts had projected. This is what I love about this company, though, as far as Apple goes, not necessarily the innovation or anything like that. That's, kind of just improving, if that's what you believe, over what other people have done. It's just that they sit on cash. There's a lot of cash here. There's a mountain of cash. $90 billion is what they're saying they're going to have for this year, and that was actually a disappointing number for a lot of people. $90 billion, and they never have to use it to buy anybody. They
Yeah,
never.
yeah, they
They
are
never.
they are a financially sound company. Like I said, I've bought and sold the stock. I've traded it. I've invested in it before at different times. I've made money every single time. I believe I'm currently sitting on maybe 1,000, 2,000 shares. I have to check. I can't remember,
Yeah.
but I'm sitting on a few shares of it myself right now. Even though I'm sitting here like complaining about it, I still own the company.
Apple, I mean, they didn't have to buy, they didn't have to acquire another company, spend billions of dollars to acquire another company to produce the headset. They just did it themselves. They don't. And if you're charging too much for chips, they just create their own, like the Apple A7.
Well, we're gonna get into chips here in a
Software crap.
second, but let's move forward to a company that did also create their own. What is it, Meta?
Yeah. Okay. So I want to go and talk about a decades old story here. the new Coke story. So sometime in the mid to I think late maybe 1980s. I know it was the 1980s, but it was mid or late. Um, Coca-Cola was losing in taste tests to Pepsi, and they panicked and they said, "Let's go ahead and reinvent our formula. We'll make a new Coke, take the old off the market." And what it wound up doing is it wound up really causing them to, in the short term, at least to lose a lot of customers. The share price dropped heavily. Warren Buffett famously bought it, and Coke then you realized, hey, you know what? There's enough demand here for us to go back to the old Coke. Let's just go back to the old Coke that we were doing, and their sales actually increased, and they kind of took the lead from Pepsi throughout the 80s and the 90s. Probably because people missed the old Coke so much. Absence makes the heart grow fonder. And when the CEO at the time of Coke was asked, did he do that on purpose? He said, no, he's not that smart. It was just a really stupid move to go away from the Coca-Cola that everybody was used to and try to create a new one. Meta had their Coke moment with Cambridge Analytica and all of the things that they were going through a couple of years ago. So did General Electric, by the way. And I don't understand why all of these analysts that were so bearish back then are so bullish now. You're bullish on it now when it's like $435 a share. Imagine how much money you would have made for the people that listened to you if you were bullish when it was $95 a share.
I mean, that's like I say, you can never call a bottom. Don't try to call a bottom, but just look at if you learn how to value a company, right? And you follow and you read books like The Warren Buffett Way, which is a great book for learning how to value a company, then you would have seen that Meta should actually be valued higher.
It should have been because Facebook is and was then too just as much of a household name as Coca-Cola. And that's where the parallels are for everybody's on Facebook. Everybody in the 1980s, I mean, they were using Coke as a synonym for pop. Go get a Coke, and sometimes they would be getting a Pepsi, but they would still call it a Coke.
Yeah, and that's more geographical too in the United States.
Yeah, but still, it's a good comparison to make, and I just don't understand why people miss that. I don't understand why they missed it with General Electric, and I don't understand why they missed it with Meta. And I mean, to me right now, everybody's coming out of the woodwork to be bullish on Meta because I feel like they don't want to look stupid for being bearish in the past. They're getting on the bandwagon, in my opinion. How you weren't bullish on Meta at 11 times earnings, but now you're bullish on it at 32 times earnings is just blows my mind.
But they finally see the value.
I know, but and what they're saying is they're saying, well, it was a year of efficiency. They restructured their company. They really didn't restructure that much.
I've seen a lot of headlines about that too, how the big tech firms are growing by shrinking. And that's been like some of the key catchphrase headlines that's been out this week.
Well, I mean, the thing is yeah, some people got laid off, but they've still spent $60 billion on Reality Labs. That expenditure has not slowed down. And that's one of the reasons why everybody was so bearish on it 2 years ago.
Yeah, they have a $3,000 headset too, and then they also have the gamer headset that everybody uses.
Yeah. Well, I mean, more important than all of that right now, the advertising revenue came in at $38.7 billion. That's 24% growth year over year, which is pretty good. I just don't, I can't be super bullish on Meta right now. I can't. I still own it. I'm not selling it at 32 times earnings. I think it's fairly valued. When you have back to back to back all-time earnings, or all-time highs, I mean, for the stock, that's bullish for the short term to medium term because everybody kind of wants to jump on the train. But I think when you're buying at all-time highs, you're kind of limiting your long-term growth and long-term profitability for your portfolio. With that being said, Dave, let me say this real quick. If you're buying at all-time lows, you're limiting your short-term to medium-term growth, but you're expanding on your long-term. How many times, let me just say this real quick. How many times did I get on here or jump on Twitter or stock twits or whatever and say, ah, well, I guess I'm buying Meta again today, because it was starting to get frustrating, because I think my average was $152, and that's where it is still today because I haven't bought another share since it got
Yeah.
above that. But my
Yeah.
average got down to $152 a share. It was at $90 a share, I think, the last time I bought it, 93, 95, somewhere around there. And I was just getting frustrated because I knew this company should be valued higher and that it was going to be. I just didn't know when. And I was trying to buy new stocks on the market, and I kept having to buy Meta because it kept going lower and lower and lower. Go ahead. Go ahead,
All
man.
right. So the statement is, and this is a statement I disagree with. When you're buying all-time highs, you limit how the return you could get.
Yeah.
And I here's why that this statement's incorrect. So, and the statement's I believe incorrect in a lot of ways. And I'll give you a real life example of where I made a mistake of selling out, getting out of a company when it was at an all-time high, and I said that this company can't go any higher. It's overvalued, yada yada yada. All right. So the company I'm talking about is Nvidia. Nvidia had a big jump up at one point up to $400. I sold my stake. I got out. I made a ton of money. I was very happy. I said it's overvalued. Can't go any higher. Nvidia today right now is over $600. All right. And it's continuing to grow, and it's continuing to grow and grow and grow. The point I'm making, if a company has growth, if a company has invested it correctly, and they have shown that, look, we have these future plans coming up this next year. We are growing. We are going to continue to grow. Here's our expected growth rate for the next few quarters. You can still have that same kind of return again and again and again if they continue to grow. Yeah, there's only so many people on the planet. There's only so many dollars. They're gonna have to cap out somewhere. But if there's growth, there's growth. And I got it wrong with Nvidia, and I missed out on bigger returns. And I just, I want to disagree with that statement that if the company's strong, it's strong. You buy in.
I view the market kind of as a pendulum where it swings from super bearish to super bullish, and it stays on one of those two sides for a majority of the time, but every once in a while it kind of comes back down into the medium where it should really be, a revert to the median kind of thing. And I think Nvidia is a little bit on the bullish side right now, and I'll be interested to see where Nvidia's stock price is in 2 years.
Yeah, but I mean, they've shown the growth though, and that's the thing.
Yeah.
And everybody on Facebook has said, yes, you're going to see some sell off after this huge rise because that's just going to be profit takers. All the investment banks are not going to leave all their money in there when they've had just such a big gain. They'll take 5% off of their position
Yeah.
because they're taking that profit. And that's a smart move, financially move when you're, investing with trillions of dollars as a big bank. That's a smart thing to do because then you could take that money, put it to work somewhere else.
So
Um, so you will see some fall off from that high, but then will that fall off happen, and then will it go even higher?
it depends
That's
on
the question.
how much instant gratification you want. And that's not a insult or anything like that. You have to kind of get to know your own mentality and your own psychology. Because I think right now another company that could be proved to be in line with that whole Coke story is Disney. Um, and I think over the next 5 years, there's probably more opportunity. And man, this could come back to haunt me. But over the next 5 years, there's probably more opportunity in buying Disney where it is right now than buying Meta where it is right now.
So I have a different company in mind, and I'll get to that here in a minute. But yeah,
Okay. But I do want to say this. Everybody's talking about Meta, the greatest turnaround in the history of the corporate world. It's General Electric, in my opinion. You're saying, I know it's a different industry, but I mean, look, $100 billion in debt reduction over the past like 2 years.
no,
100 billion. General Electric right now is in such a good position. 17 times earnings, by the way, compared to Meta's 32. But I know Meta's tech. I get Meta's tech, so it kind of, that makes sense. But General Electric, $100 billion. They're in such a better position. I bought this stock. I was super bullish, said that this was probably going to be the greatest American turnaround story in the history of stocks. years ago. 2 years ago, I think it was. Held it through once again more dips than what I wanted to, but I mean, I've doubled my money in it now because I held on to it and I kept my faith. And Larry Culp's a great, CEO. He's the type of guy where I almost don't even, I listen to the General Electric calls because I want to know, are they on target to spin off GE Vernova? Because I honestly still don't want anything to do with Vernova, even though they're narrowing their losses. I don't care to buy stocks that are losing money. But um, GE Aerospace is really why I bought this for. Bought GE a long time ago. They spun off the healthcare unit. I made like 40% on that. I think it's still up 20% from where, that was at. I sold that. I'm going to sell Vernova. I'm going to hold on to GE Aerospace, but they're in a better position than I thought they were going to be. I think they're in a better position than Larry Culp even thought they were going to be. I don't think anybody thought $100 billion in debt was going to go away.
Yeah, no, he did an amazing turnaround. Give him all the credit in the world. Definitely fantastic. But there's been so many historic turnarounds in the business community, just in the United States alone, that yeah, you could rank it amongst the best, but I don't know if it's the best ever. But it's amazing turnaround what he did with the company.
Lot of missteps. I think it's, in my opinion, it's more impressive than what Zuckerberg's done with Meta, even though Meta's stock price has soared and been crazy. I think the past 12 months, GE's up 70% or something like that. So that's, nothing to look away from either. But I think if you're going to buy a stock that's been outperforming the market, I think for me, it would be General Electric right now. Still, I think they're at a good value. And you're going to have the spinoff right now. I think you're probably going to make some money off Renova. I would sell it once you become profitable on it. I would hold GE Aerospace.
All right, cool. Well, I hate to rush you along here, but I had some things as well to bring up today.
You're good. You're good.
I don't know if you were aware of that, Brandon, or not. So I kind of want to go over some numbers here. You know, Tesla numbers. So Tesla had a what everyone called a disappointing quarter, and then they had news of a recall. So I want to cover some numbers about Tesla and what happened here. Tesla reported 15 billion GAAP net income in 2023, 7.9 billion in Q4, 10.9 billion in non-GAAP net income, and 2.5 billion in Q4. They did receive a one-time non-cash tax benefit of 5.9 billion in Q4 for the release of valuation of allowance on certain deferred tax assets. What does that mean, right? So, first off, the biggest difference between GAAP and non-GAAP is non-GAAP figures are not required to include non-recurring or non-cash expenses. Non-recurring expense are seen as one-time or extraordinary expenses, such as one-off real estate or equipment purchases or costs following an accident, versus GAAP. GAAP is, doesn't include that in their actual earnings. So that's why sometimes a non-GAAP net income can be less or more than a GAAP income. So the non-GAAP income for Tesla was 10.9 billion versus the GAAP income, which was 15 billion. So there was a difference there. And the difference between operating income and net income: operating income includes only sales or revenue from a business primary operations, after deducting routine operating expenses. Net income includes non-operating income, such as one-time gains from selling assets or investments. So operating income, again, was positive, and net operating, I mean, it's all positive here, all positive. So what happened, right? Why did Tesla slide? They put out a bunch of vehicles. The vehicle number was seen to be less than what they expected. However, it was still fairly high, man. I didn't see a reason for the vehicles to come out high. I mean, for the stock to drop so much. But then some people were saying it's because of the recall. So let's look into this recall here. I'm going to read you from the Reuters newswire that came out about the recall. Tesla's recalling nearly all the vehicles that sold in the U.S. because of some warning lights on the instrument panel are too small. The recall of nearly 2.2 million vehicles announced Friday by the National Highway Traffic and Safety Administration is a sign of stepped up scrutiny of the electric vehicle maker. The agency also said it upgraded the 2023 investigation in Tesla's steering problems to an engineering analysis step closer to a recall, right? So you're like, oh man, they got to bring back 2.2 million cars and take them all back, and that's just going to kill the company, right? Because that's what you think a recall means. That's incorrect and that's false.
Yep.
They do not have to do that. Here's what the truth of it is. So documents posted Friday by the agency said the warning light recall will be done with an online software update. That's it. It covers the 2012 to 2023 Model S, the 2016 to 2023 Model X, the 2017 to 2023 Model 3, and the 2019-2024 Model Y, and the 2024 Cybertruck. The agency said that the brake, park, and anti-lock brake warning lights. Again, these are quotes from the actual safety agency and Reuters, not from Tesla. They're saying basically, I'm gonna just paraphrase the rest of this article, but it's basically saying that the thing was that the lights, the signal switches on the dashboard were too small, and they need to be bigger so people could realize there might be an issue wrong with the car. If there was an issue, like you normally see warning lights on behind your steering wheel. And so Tesla's just going to do a software update and fix the problem. Boom. There is actually no recall. But when you put a headline out that says 2.2 million cars recalled, you will see the stock drop like it did. And that's why the stock fell like it did. Given that the company is profitable, given that the company has a profit margin higher in electric vehicles than any other electric vehicle automaker in the world, I would buy the stock based off of this dip. I already own it.
So.
Huh?
You need to gather your information before you sell a stock.
Yeah, and I already own it, so I'm just holding it. For me, I'm just holding it.
So there's another good example of this that happened on Friday morning. General Electric, when they reported, people were like, oh, this guidance is terrible. And then they realized, wait a minute, they're splitting off into two separate companies and they were giving two different guidance numbers here. Let's combine them. Oh, now the guidance is right on track where we expected it to be. Maybe you did expect a little bit more, but General Electric, because people initially reacted to confusing guidance early in the morning, it was down 5% Friday, and it wound up being up 2% by the end of the day.
Yeah.
So if you would have just waited or looked at the information yourself, like you're doing here with Tesla, then you would have realized maybe you actually could have bought more shares in the morning instead of selling it off and, taking a dip on it. It doesn't make any sense that people do that. And whales do it all the time. Rich people do it, which is why the stock moves the way that it does, because they're the ones that move the markets.
Yeah.
Maybe
they
do their mistakes. Do your own research and know what you're listening to and what's being talked about and what you're reading before you react to it.
And yeah, and to me, this is a great opportunity. If you don't own any Tesla stock and you were thinking about it before the headlines last week, great opportunity to get in at a low. I would say get in. I'm definitely a buyer of it. I hold it currently, and I'm just going to continue to hold it. I don't have a whole lot of free cash. Unfortunately, my cash level is smaller right now. I'm very invested, but I do have some cash, but I'm not going to put it to use in Tesla. I own enough of it already. But I believe this company is going to, at some point you can't bet against Musk is how I look at it. If a stock Tesla will drop low enough to a point where like, I'm not betting against Musk at this level. So
I'm kind of the same way right now too. I used most of my cash levels on Pepsi when I bought Pepsi like a month and a half ago. And I'm in an uncomfortable position right now. I'm not going to sell any shares, but I need to build up my cash flow.
Yeah. Sure. I have some cash, like I said, but I'm waiting for something else. But yeah, I wanted to give everybody the clear guidance on Tesla there and let you know what's going on. I also want to give you an update on something else that is I've talked about Novo Nordisk. I don't know if anybody's aware because of all the tech news that came out, but they actually reported earnings. I initiated a buy. I'm like an analyst now. I initiated a buy rating when this was at around $100 a share, a little below that, and that's when I got in. And I was joking around with Brandon because like when I bought in, it did down to like 96, 95 a share. And I was like, look, this is like every single time with me. I initiate a position and it drops. But I was in it for long term, and I've been in it for long term. But they finally reported earnings, and it was spectacular. I can't say how enough about just you want to talk about heading out of the park. This was, this was what who was that guy who was batting for home run king with Sammy Sosa back in the day?
Mark McGuire.
Mark McGuire and Sammy Sosa on steroids.
On
Is
more
how this.
steroids.
Yeah, but this is on top of that. Um, so here's
Oh,
the
no, it wasn't steroids, Dave. It was creatine.
so the expectations for Novo Nordisk was 66 cents a share EPS is what they're expecting to report. The EPS, sorry. They reported an EPS of $4.91. So I'm surprised it didn't go higher than it did. It's currently sitting at $113 a share. I'm surprised it's still not moving higher. If you look into this, I'm just going to be real brief because I own it. I'm going to sit on it. And I said that there's a very good chance that this company could double over the course of 2024. That was a statement I made when I bought in December of 2023. And I made it on the show, right? So let's look at some of these numbers here. Some I want to highlight. In North America operations, obesity care sales grew 212%. 212% growth. However, that was a little offset by total rare disease sales decreased by 15%. It offset the market there, right? 29% sales growth in diabetes care. The global diabetes value market share, the market share of the global diabetes market. Global. Let me say that one more time. The global share of diabetes care in the world for Novo Nordisk is 33.8% share. So that's above. This is a quote from them. That's above our strategic aspiration. All right. So it continues to get better and better and better. Novo Nordisk is the market leader in international operations with the GLP-1 value market share of over 70%. Ozempic continues its GLP-1 market leadership with 47.5%. Now, there is a competitor to Ozempic and Wegovy, and I forget the name now because I'm so stoked about Novo Nordisk, but they own the other 44%. So the two companies that have these weight loss drugs, Brandon, that you were skeptical of at first, own over 90% of the market share in the world. Oh, no, North America. Sorry, I want to quote myself correctly. In North America, 90% of the market share by two companies. So, I mean, I could go on, but it's just great news for Novo Nordisk across the board. Again, I see growth and I see there's a great opportunity. I stand by my position for it to double from the price that it was back in December of last year, which was around 98, 99, $100 a share.
You can't blame me, though, for everything that our generation has been through with weight loss drugs to initially be skeptical as soon as I hear the term weight loss drug.
I know, but I kept coming on and I kept producing clinical trials and facts and saying this is why I believe in this company. And it's blown away by the numbers. They can't keep up with demand, but they are building, like I said, they're building manufacturing plants strictly just to manufacture this drug.
So where are we at now with the valuation on the company? Do you have those numbers in front of you by any chance?
I knew you were gonna ask, and I did, but I just closed out that tab. Let me see if I want to go off top of my head. I'm going to go off the top of my head here, but I believe growth to earnings is somewhere around 40. I want to say 40.
Okay.
Which I think is actually pretty fair.
They're expecting earnings to grow 40% year over year.
Yes.
Okay. Wow.
I expect them to blow that number away.
Okay. Nice.
So I wish they would up their dividend, but I'd rather them invest it and build more plants. Yeah.
Had our first dividend on Meta last week.
I saw that.
It was minuscule, but
yes,
I'll take it.
All right. I got two quick articles, but they're very important because they cover a couple things, and then we can get into final thoughts here. This first article was by Reuters. It came out yesterday, Saturday, February the 3rd at 2:34 p.m. There's no author listed. The headline reads, Crypto exchange Gemini says bankrupt Genesis moves to authorize sale of trust assets. So cryptocurrency exchange Gemini Trust, a company, said on Saturday that the crypto lender Genesis had filed a motion in U.S. bankruptcy court authorizing the sale of their trust assets, seeking to authorize, monetize its interest in Grayscale, Ethereum Trust, securities, so on and so forth. This article continues to go on. It's saying it's a defunct Gemini Earn Linden program. Pardon me, I'm losing my voice here. The Earn Linden program is defunct. They're moving ahead with a liquidation plan to repay customers in cash or cryptocurrency, depending on the types of currency they had deposited in that Earn program. More like a staking program. Brandon, your first initial thoughts, because I'm probably going to have a different thought to you on this.
I don't know that you will, because I don't have any thoughts on it, because it's cryptocurrency and it's just beyond me.
All right, so here's my thought. I think this is fabulous for the cryptocurrency world. Fabulous. There's still two. So I own some cryptocurrency. I've owned some Ripple. I own some Bitcoin. I own some of the other coins. I don't have a whole lot of money that I've invested in it. My Bitcoins I own are that I mined years ago, 10 years ago. I didn't buy those. The cryptocurrencies that I bought, I don't have huge. I'm not going in there with $100,000, $500,000. You know what I mean? I don't have a huge investment in them. I think this is great for the cryptocurrency world because it's getting rid of these smaller companies like the Sam Brinkmans that are just built on nothing and there's nothing behind them and they're not really making money, and they need to weed it out more. It still needs the sector needs to consolidate even more. And I think this is good for the community so that it can continue to consolidate so they can focus on the real value opportunities in here and weed out all the noise.
Yeah, that's the one thing that I do know is that consolidation in crypto is needed. Bitcoin will probably come out on top. Ethereum probably as well, the most popular ones right now. But when it comes to cryptocurrency, I've got a lot of opinions on different things, but I try to keep my mouth shut on stuff I don't know what I'm talking about, I like the idea behind cryptocurrency. I like the idea of trying to get away from a central bank, but I don't know I don't know enough about how it works still to this day.
Yeah, yeah, and this I'm talking about a cryptocurrency exchange. There's too many exchanges out there, and some of these like exchanges, like you and I put up, and we built one online, running a server out of our garage, and there's no security walls there, and money just keeps getting lost. That's the problem. Those are the ones I want to consolidate and move out, because you have solid exchanges like that are still that haven't had issues in a while, such as Coinbase. They fixed all their issues. You have crypto.com. That's a solid exchange. You have some good solid exchanges that people need to lean to and get away from these smaller ones that I seem to me to be more shady.
Yeah.
So that's why I'm excited about it.
I like moving away from the central bank though. You know what? One of the things that really irritated me, one of the Federal Reserve officials came out over the week and said that they're keeping interest rates higher for right now because they're working on inflation, which is great. I like that. But then he also came out and said another thing that, and it may have been a woman too. I don't know. I was just reading the comments and stuff and what they said, but I don't remember who said it. They're still concerned with the power dynamic. And this is an exact quote. It's not an exact quote, but still concerned with the power dynamic in the labor market. And that to me is just something that should not be their business whatsoever.
Yeah,
That
no,
frustrated me to hear that. Like, if that's your reason to keep interest rates higher, and we're agreeing that interest rates need to stay higher because of inflation, but then you say it's the power dynamic in the labor market, that makes me question where your loyalties are.
so
But
here's the problem. I know who it was and who they came out. She over the weekend did come out, and the statements that I kept reading in the articles I read was that she was concerned about inflation sneaking back up, especially this whole course of this year. But as long as the administration doesn't allow things to end, She would like to keep rates where they're at because if they allow certain things to end that could cause inflation to go higher, or they pass certain bills that could cause inflation to go higher. She was trying to remain apolitical, but she was actually tiptoeing the water in politics. But her focus was on the actual inflation number. She was worried it's going to tick higher, and that's why she wants to stay at the current rates for longer to make sure it doesn't tick back up.
Yeah, I get the inflation thing. I understand that because that's the job of the Federal Reserve to control that. But when you start talking about trying to influence whether people or not can or will leave their jobs and go to another job and things like that, then all of a sudden you're kind of getting into backdoor socialism. You know what I mean? Like then all of a sudden you are the central planner, and
Yeah,
that's
the Federal Reserve has two mandates, and yeah, you're asking them to just stick to those two mandates, and
exactly,
that's it,
exactly,
and that's alone.
exactly.
There you go. All right, so moving on. Next article here, what came out this today at 3:31 a.m. by Reuters. Again, no headline here, but I find this one kind of ironic. But I want to get your thoughts on this. Foxconn sees slightly better 2024, but warns on AI chip shortage. Here's a quote from Foxconn chairman Lu Young Wei. His quote is, "We did pretty well last year, although we had a rather large write-off in the first quarter. Um, and as for this year's outlook, I think we'll be slightly better than last year." Basically, they're referring to that write down to 34% stake in Japanese electronics maker Sharp Corp. They said they had a relatively conservative and neutral outlook for 2024. The demand for AI servers will, of course, be good, but global economic uncertainty, given geopolitical problems, will affect consumer product demand. Here's the ironic part as we get down further in here. This is a quote from the chairman. When it comes to keeping up with demand, perhaps there need to be new factories. Well, of course, someone whose main business is running manufacturing factories would say, "Hey, we need to keep up with AI demand by building new factories," because obviously you want to run them.
Yeah.
But what are your thoughts, Brandon, on his comments that Foxconn's going to have a good year, but AI demand is too much to keep up with the actual product?
It's a good problem to have. It really
Yeah,
is.
yeah,
It's a problem, but it's a good problem to have.
yeah. And Nvidia has already said this though in their earnings reports that that's their only concern is getting enough chips out there to meet the demand that they've been asking.
There's a lot of movement when it comes to in different parts when it comes to making these chips from the sands and in China to Taiwan to the rest of the world, and part of me wonders if this might actually be the answer to the freight recession.
Right.
Yeah.
Yeah, so I'm still bullish on the certain parts of the AI movement. I'm not buying ABC company that says they're all innovative AI and they're a company I've never heard of and they actually don't have any products. I'm not buying them based off the hype because this is what we see with different sectors. A brand new sector arrives. It's a great sector. It's going to do a lot for the economy, AI, but then you have all these other smaller companies that show up with it and then they disappear in 2 years. I'm just saying, be careful with your investments. Just because someone uses the term AI doesn't mean it's a good thing to do.
Hype. It's hype.
So,
I will be interested though to see what Apple does announce in terms of AI, because Tim Cook did say that at the end of the year we will find out where their investments are going in AI. So I'm sure that's going to be a September, meeting. Or what do they call those things that they always do every year where they announce the iPhone? Those Apple events. I'm sure there'll be an Apple event in September where we find out what they're doing with AI at Apple.
look, man, I'm just saying that between Boston Dynamics and Tesla, some of the more innovative things is that you're going to have robots working in factories uh, just a lot sooner than you realize. I believe we'll see it long after I'm just retired and I'm sitting in my pajamas still doing this podcast 20, 30 years from now. Um, that's when we're gonna have no more people moving boxes in warehouses because they're moving faster. If you go online and start researching the things that Tesla's doing with their humanoid robot, what things that Boston Dynamics is doing with their robots, and it's amazing. It's amazing how far they've come so fast. Because 5 years ago we would have said, "Oh, we're at least 15 years away from that," but here we are 5 years later doing it.
Yeah. Well, I think the 3-day weekend is coming up sooner than we expected. And I think a lot of people are so afraid of those robots and the AI of taking their jobs, but really what I think it's going to do over the long term is just increase productivity. I think people are going to find new demands to meet where jobs can be created. I just think we're going to have to work less hours. And I think the pay will probably still be the same, if not higher.
There you go. Final thought, Brandon.
Last week, I mentioned that I was going to talk about Argentina this week. Find a company for everybody to buy. I'm actually going the lazy man's route here. I'm recommending over the long term because they're doing shock capitalism, just like Russia did in the early 1990s. There's going to be some troubles here that causes in the short term, but it's a great thing if the current Argentinian president can actually get his way and they're able to privatize all these nationalized companies. It's going to be a good thing for Argentina. I hope he can do it. I think they do elections there every 4 years, though. So that first initial shock of unemployment, I hope they don't throw him out after his first term. But with that being said, instead of having to do your own research and looking into, in particular, companies doing the hard thing and looking at the microeconomics, let's just look at the macroeconomic situation. Let's buy into Global X MSCI Argentina ETF. The ticker symbol here is ARGT. The expense ratio is at 0.59%. What that means is for every $1,000 invested, $5.90 goes to administrative fees. You're basically paying the fund managers to do the research and buy the right stocks for you. That way, if you're like me, you got a 40, 50, 60 hour a week job and you don't have time to keep track of all the things that are going on in other countries, much less keep track of the companies within that country. Buying this is the more safe bet. Um, as far as expense ratio goes, anything under 0.75% is reasonable. I always recommend SPY here in the United States as an ETF because the expense ratio is an ultra low 0.09%. But 0.59% is not bad, and that's what I'm going to recommend for people to buy and hold over the next 10 to 15 years. And this way, all you have to do is just kind of keep track of who's being elected in Argentina and, maybe check up on the politics once every month or so.
Nice. I like it. All
And
right.
keep in mind, it's an emerging market fund here. It's going to be volatile. Understand that you're going to have 10%, 20% moves on a daily basis. But if you're keeping track of Argentina and you're seeing that, they're still going in the right direction, then you just hold it.
There you go. Novo Nordisk killed it on earnings. If their name was Meta, Nvidia, Apple, or Google, Alphabet, and they mentioned AI, it would have jumped 30%. That's all I'm saying right there, but they didn't mention AI. So they only jumped 10%, which they could have. There's a lot more movement here. You're not invested yet. Invest in it for long term, not a day trade, not a swing trade, long term, because it has ups and downs. Amazon had a great quarter as well. We didn't cover it here, but now they're at 170 a share. I have a few people I know that I've been telling them to buy Amazon. They've been buying it since it was around 110, 115, and they're thrilled that they continue to invest in that. Amazon is a good one. However, off this high, you might see some profit taken this week. You might not. You might continue to go higher. Nvidia, man, $662 a share, Brand. I wish I would have held on to that. But we live and we learn. Still a monster. It's gonna have a monster year. It's just whether or not they can build these chips fast enough, something to keep an eye out. And if AI demand pumps up, Google had a great earnings report as far as I'm considered, as far as why I'm looking at long term. I don't see a reason why I dropped over $10 a share based off that earnings report. I think their core business is still solid and producing profit for them. They're just having to invest more into AI than what than what investors prefer. And it's like you got to spend some money to make money, and that's what it comes down to.
Yeah.
So, All right, guys. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.